Good morning, everyone.
Good morning, Mr. Chairman.
I am happy to welcome all of you for today for our meeting. Thank you to all who are present today.
Oh, the pleasure is ours, Mr. Chairman.
So, Ms. Secretary, can you explain our agenda for today's meeting?
No problem, Mr. Chairman. For today's meeting, we will discuss the problem of the internal control system in our company, Berjaya Maju Enterprise.
That's right, Ms. Secretary. So, as we receive a report from our auditors, there are problems with our internal control system in our company. So, Ms. Zulaika and Ms. Sufi will explain more about it later.
That's right, Mrs. Chairman.
But before that, but before that, let me introduce our company. So, Berjaya Maju Enterprise. But before that, let me introduce our company. So, Berjaya Maju Enterprise started the operation in 2019, and as we already know, Berjaya Maju Enterprise is a company or supplier that supplies materials such as plastic pipes, brass and cast iron valves and other items to customer, or to be more specific, supply it to contractors. So for almost 4 years of operation, we already managed to supply our product to almost 300 contractors company.
Without wasting our time, let's proceed with our main objective. We can start with Ms. Sufi to point out her opinion about our company internal control.
Hello and good morning, everyone. So I am Sufi, and I'm going to talk about the internet control of your company, Berjaya Maju Enterprise. So as you all know, that my partner and I have done this test of control audit, and today we will give you our opinion. So I'm going to start with the intro to the internal control system. So a bit of introduction to internal control system is that internal controls are the system guidelines and also practices that a business uses to guarantee the accuracy of its financial and accounting data, foster accountability, and thwart fraud. So internal control help business adhere to legal requirements and stop staff from defrauding clients or even stealing from them. So by making financial reporting more accurate and timely, they can also aid in increasing operational efficiency. So the company's internal controls and corporate governance depend heavily on internal audits. So now, let me begin with the implementation of the internal control system of your company based on the control objectives, control activities, and tasks of control. So firstly, I would like to point out on the issuing of the goods in control of the objectives. So the movement of items or materials out of the warehouse is a good issue because the storekeeper process the approved sales order by preparing stocks for the shipment. So when there is authorization of the shipment of goods, then it can avoid the shortage of the stocks. So under control activities, all goods issues are checked against approved sales order in terms of quantity and also the type of goods. So as an example, you can see that the yard workers assemble the order item based on the company of the sales order. From that contains description of the items ordered, quantities, and also the unit prices and sales terms. So this is a good example that for showing how the control activities work. So we as an auditor will be performing document inspection procedures by vouch to sales invoice and approve of the sales orders during our test of control. Next is for the recording of sales. So whether controls should be put in place while recording of the sales. So this is to make sure that all the transactions are documented and that there are no fraudulent or overstated sales. So as an addition, the sales figures need to be documented correctly and within the appropriate time frame. So this can be shown on the contract activities that by a monthly customer statement prepared and also sent to each of the customer as a notification of the current balance. So for an example, based on the open credit sales order, the bookkeeper prepares the monthly statements and then mails them to the customers. So for the test of control, we will be examining the evidence of checks on the total for the sales journal entries and also the amount posted to the customer's account to make sure that all the statements that have been prepared are the same as the customer's copies. Next is for the efficiency conduct of business. This is to ensure that the operations run is uninterrupted delay and that the process runs smoothly. Control must be implemented. So by doing this, the risk of inefficiency and also threats to the organization's capacity to generate value is reduced. This can be done by the management developing general controls over the technology. So for instance, every morning, the salesperson and also the bookkeeper have control over the phone and also the mail in taking orders and receiving remittances payment from the customer. So as an auditor, we can observe the entity's operation to know whether the company has conducted the business efficiently or not. So for the timely preparation of financial statements, your organization should be able to adhere to their deadlines and also present the accounts precisely as required by the law. So as an additional, they owe it to their shareholders to make insightful statements. The management accounting procedures, which are essential for effective strategic planning, decision making, and performance monitoring of the organization may also be subjected to internal controls. So, as I can see, your company has adequate documents and records by pre-numbering and also prepared at the time of transaction. So, this is shown that by the bank reconciliation statement that has been prepared by the bookkeeper from your company regularly at the end of each month. So, when we do an inspection for the relevant documentation, we can detect that if there are any documents or even transactions that are not supposedly following the required by law, and there are adequate documents and records of the financial statements. So lastly is for the safeguarding of the bank accounts. The internal reconciliation provides the assurance that the internal records are accurate in terms of how much should be kept safe. So this is an accomplishment by comparing the total amount of money that the company believes it has in its protected accounts, whereas only accounting for the appropriate amount. So by comparing its organization business balances with its own record, the company's record in the safeguarding account, so your company is able to verify the accuracy of its own data. So by given the timing variations, this comparison should produce an exact match. So as an example, the bookkeeper from your company prepares the bank reconciliation statement every month. So we can compare that. So we can check for any missing bank statements by test checking to ensure that the bank reconciliation has been prepared promptly.
Okay, thank you, Ms. Sufi. Next, we can proceed with Ms. Zulaika to further explanation regarding of our issue.
Hi, I'm Mrs. Zulaika, and I will continue with the material weaknesses, implication, and follow with recommendation that we suggest on the material weaknesses. But before that, I would like to highlight the responsibility of the management in terms of internal control. The establishment and maintenance of efficient internal control over financial reporting, the accounting principles, the protection of assets, and the compliance with relevant law and regulations are all included in all responsibility. All financial records and other information must be made available to us by management. In planning and performing our audit on internal control, there were some material weaknesses detected through our assessment during this interim audit. We consider the ISA internal control over financial reporting as our opinion on the financial statements, but not for the purpose of expressing opinion on the effectiveness of ISA internal control. Accordingly, we will express our opinion on weaknesses of the company internal control. Now, we have detected material weaknesses during the test of control, such as inadequate segregation of duties, inadequate physical control of assets, missing reports and documents, and also lack of proper review and approval. Next, a deficiency of internal control exists by inadequate segregation of duties. It happens when your company employs only one bookkeeper. It is better to have two bookkeepers. These material weaknesses will affect the accuracy of financial reports by increasing the risk of errors and fraudulent acts involving that one person, since that will have full responsibility for the task. They will also leave the task unchecked.
Oh, I see. As our auditor, what are your recommendations for our company to improve our internal control?
For improvement, we suggest that the management should appoint two bookkeepers, since there were a lot of reports and documents that might be received for the day. Therefore, it may reduce the risk of errors and frauds. Next, secondly, the weakness detected through the company internal control is inadequate physical control of assets, since the customer collected and ordered items directly from the yard, and it proven that no control over the stock items. The implications that will result from this inefficient internal control is stock items might be lost due to unauthorized control by the store manager, since the customer also have access over the stock items. Therefore, it will increase the risk of inventory losses. We recommend that the management should establish control in securing and safeguarding the vulnerable assets, such as inventories, including limited access on the asset. To avoid the risk of loss, the management should also appoint the storekeeper that only have access control over the stock items and periodically count the inventories to detect any loss. Next, in addition, the material weaknesses that we perceive from the internal control is missing reports and documents in which sales order were removed by the bookkeeper after remittance received from the customer. The removal of the document for files to other files will increase risk of missing documents, which will lead to material misstatement in financial statements. Therefore, it will be hard to verify the accuracy of the information in the reports. For improvement, we will advise that all documents, including sales order, invoice, good receipt notes, and payment receipt, should be maintained and backed up by the bookkeeper to avoid missing and dislocating. We, as auditor, assume that it is not documented if it didn't happen. The hard evidence need to fully verify that the necessary process and control are being applied by providing the adequate supporting documentation. Next, And finally, we will also detect lack of proper review and approval from the internal control, where the bookkeeper prepare monthly statements from the file of open credit sales order and mails them to the customer without being reviewed and approved by the manager beforehand. The monthly statements prepared might contain bias and misstatement that might lead to management inefficiency. Therefore, the risk of fraudulent act will be significantly risen. We would recommend the management to develop effective policies and procedures that ensure the proper preparation of the statement. The internal control should also strengthen over the review and approval to complete the statement in accuracy, supported and approved prior posting on each month.
All the opinions that have been pointed out by Ms. Sufi and Ms. Zulaika will be considered and will be implemented as soon as possible. Ms. Chairman, I move that we adjourn the meeting and enjoy some refreshment.
Thank you everyone for your attention and participation for this meeting. I now declare the meeting adjourned. Thank you.